look out my window.
Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Thursday, the 3rd day of June, and this is the Daily Report. Significant selling pressure in Forex Gold today has pushed the market substantially lower, currently trading down between $15 and $20, with a low today just around $1,200. Of course, traders taking our calls, we did enter the market at 1185, 1186. We trailed our stop to 1209. Traders, we did in fact pull profits this morning, having our trailing stop hit at 1209. Now, what I am finding interesting in the market are a couple of things. First of all, of course, a brutal sell-off. From a high of 1224 to a intraday low of 1200.73, the market substantially gave back much of the gains that we saw as it ran from 1166 all the way up to 1227. In fact, if we put up a Fibonacci retracement sequence, and traders, I'm going to be drawing that on this last wave 5 from this low at 1165 to this high of 1228, what we are seeing is as follows. It seems as though that this retracement took us almost to a 50% retracement of this move, this recent move on wave 5. A 50% retracement would be 1197. As I say, it took us to an intraday low of about 1200. It has substantially come off that low, trading approximately $7, $8 higher at this point. And we are going to peg our interim resistance at 1213. That would be our 23% retracement level based on our Fibonacci sequence. The other thing that I'm finding very interesting is that the reciprocal pattern that got us into this long position has in fact reversed and indicated a sell. For traders who follow my daily report, we issued our buy signal. This was based on a 3 river morning star. After the market's been in a defined sell-off, you have a black candle, a star that gaps below it. A following day, you get a red candle. Traders, look at this. A 3 river evening star is the reciprocal opposite of that pattern. After a defined uptrend, you get a red candle, which is a empty-bodied, meaning it opens and closes higher. You get a star that gaps above it, and then the following trading session, you get a black or a full-bodied candle. Now, of course, this candle would need confirmation to take a sell signal on it. So traders, as you can see, I've drawn in a fictitious candle. A confirming candle on a bearish reversal indicator would always be the following trading session. We're using daily charts, so on the following day, you would get another black candle with a lower high and a lower low. Do I believe we're going to witness that? Traders, right now, it is a little too early to tell. However, because of the strength that we saw when the market hit 1200 and moved back up, we saw buying enter back into the market and very strong support at 1200. My sentiment is, if we do not get continued selling through the session today and overseas in Asia, if we do see the market recoup and form a base, this could be a round of very aggressive, mind you, but profit-taking nonetheless. Another thing that we want to take a look at when we look at our Elliott wave count is the fact that on a pure wave count, you do get, and we've talked about this before, what I call a minor zigzag within that full wave itself. Let's take a look. When we look at our corrective wave, this is corrective wave A, impulse wave B, and then corrective wave C here. That completed the cycle, and then we started our wave count 1 through 5. Now, let's take a look at this C wave. If we look at the C wave in fact did have two parts. This is that one linear line, but we had that zigzag effect. In other words, the market came down, it had a move back up, and then the final completion of that wave. On our first impulse wave during our impulse phase, the market moved substantially higher from a low of, I believe it was 1045, made an interim high here right around 1118, 1119, came back down, tested approximately 1092 before it completed the final part of wave 1. The same with this corrective wave 2, this zigzag here, and then of course on 3 we also had that zigzag here. So what do I think we might be witnessing on wave 5? Is it possible that we're witnessing exactly the same thing? In other words, traders, we have wave 5, it moves up, it corrects, and then follows its path up to the completion of wave 5. Now, I do believe about last week I spoke about that exact scenario possibly happening. Time will tell, obviously. If we get confirmation of this candle here and we go into a sell, that might indicate that we're going into a corrective phase. However, as I suspect, if we find support in this area, and traders, it's a little early to tell, but if we find support in this area, we might in fact be getting this zigzag. Now, is this particular sell-off complete? My belief is that we do have really good support here at 1200. And we're going to have to see if the market wants to continue and trade higher through the day, or if profit taking will ensue and continue. Next, I really want to take a look at the big picture. To do that, I look at very, very long-term simple moving averages. The averages that I use are Fibonacci-based numbers. So this blue line represents a very, very long-term 89-day moving average, and this black simple moving average represents a 23-day moving average. Also, if we take a look at our long-term trend line support, and I'm basing it off of these lows, this low here for this trend line, and when we made that new low here for this trend line, we're absolutely still in a upward bullish trend. Very, very long term, we're not even close on an 89-day moving average. Simple moving average, 23 days, we're right there. We had a low well above these trend lines, indicating that we actually have a break or a reversal in our long-term trend. Traders, the market's going to have to feel itself out here. There's no doubt. We had an excellent trade. We entered in 1185, 1186. We got out at 1209. We captured a good portion of that move. The market, as I said, is still trading. Now trading at 1205.33. Are we going to retest that 1200 area? Will we breach that 1200 area? If we were to break below this trend line here, and again, that comes right at 1200, and trade lower, I would have to readjust what I believed. However, right now, I do look at it as a aggressive nonetheless, very aggressive nonetheless, but a round of profit taking. I am currently not viewing this with the data available to me as a reversal in market direction. So traders, what are my recommendations? We are obviously going to look to re-enter this market right now. As long as it holds that 1200 area, the direction I'm going to look for is going to be the long side. If we get a continuation of this selling pressure and that Three River Evening Star in fact confirms, then that would change my view, and I would probably look to implement a short sell in the market. As I say, it's a little bit too early to tell. I do need to see how it trades right within this area, and we can recommend a trade from there. Lastly, I want to show you on a very, very short-term intraday chart. This is a 5-minute U.S. gold chart, how quickly the market sold off and the type of candle it found at the bottom. In other words, how quickly it seemed to find a base or a bottom. What you can see is as this market sold off, it traded in a very, very defined, very narrow range. Last night it came down, it tested the area of around 1216, started flirting between 1215 and 1219. It in fact traded within that range for a defined period of time, and then we had this brutal sell-off, a break, a further break, a little bit of forming of the base, and then this large breakdown. However, we had these long black lines. Every 5 minutes, the market continued to trade lower. So if we look at it, it went from about 1211 to 1207 in a 5-minute period, then 1207 to approximately 1203, and when this would have been a black line as it started trading, it would have come down like this, and then when buyers came into the market, we formed this hammer and formed the bottom of our market right in there, and that propelled the market to form a base right around 1208, and as I say, now trading softer and currently off that. I think we saw a great indication and a very, very interesting candle. Those hammers are absolutely significant at the bottom of the market, even on intraday charts. Traders, we're going to take a close eye on this. I think we've got a great, great opportunity, if in fact this 1200 area holds, to reposition ourselves again on the long side, and in fact if this wave does want to take us to that 1265 area, in other words, if this wave is still intact and if this market is going to carry us higher, we have significant, I underline significant, opportunities on the long side. If the market wants to breach and break this 1200, there's a significant area where I think it's going to go, and there's opportunities on a short sell. Time will tell. As I say, we had a great trade that we just got out of. I want to see how this market works itself out, and then we will look to re-enter the market. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold, and wishing you, as always, traders, good trading. Bye-bye. We'll talk to you tomorrow for the weekend review.
When I look out my window, many sights to see. And when I look in my window,